everybody, welcome back to my YouTube channel. Welcome back to my YouTube channel. And if you're here for the first time, welcome. If you're a returning subscriber, a veteran in this channel, welcome back for yet another exciting episode of Risk, Money and Insurance. And so today, guys, greetings from the 25-year-old. Oh yeah, so that is me. I just turned 25 on Tuesday, the 23rd of August, and it's been amazing. Honestly, I thought I would actually do a vlog so that you guys can see like what my friends and I got up to. But Tuesday happened, we're having so much fun. We did like a games night and vibe, and I forgot to record essentially. So I thought, let me do this video. And also an interesting thing happened on Tuesday, right? So I was on Metro FM, they interviewed me on Tuesday, and I was like, Baba G, look at you putting me in those radio stations. So I really love radio, and you know, I think I've said this like a couple of times, I love radio, and one day I'm going to be on radio, I'm going to be there presenting, you know, personal finance stuff and all of that. But anyways, let me get straight to today's video. So today's video is sort of linked to Tuesday, right? And the interview I had on Tuesday with Metro FM. So on Tuesday, we were talking about, you know, what are the different bank accounts that are available in the South African market? And also not only that, are you using the right account? And so I thought, you know, it would be a nice video to just like wrap up everything and talk specifically about these different accounts. For example, we talked on the interview, we talked about, you know, student accounts, and also just like, you know, banking suits that are now very famous, where it's like a one-stop shop where you get all the different types of accounts literally merged into one thing, like it's a one-stop shop. Okay, so now let me get straight into it, right? So I've mentioned number one, the student account, which when I was a student, actually I was using. I actually used the student achiever account that I got with Standard Bank. So that was the account that I was using, and the reason for that was because the fees there were actually a bit lower, so I could, like, you know, still survive and not really get charged by bank, you know, charges as a kid. So yeah, definitely student achiever for when I was a student. But of course, with student achievers or like student accounts, the minute you start working, or like after 4 years, I think they like just rely on the fact that ideally you should be done with varsity after 4 years. So if you do that, they'll then require you to like move to like a different account afterwards, which is what happened to me. So I think I moved from like a student achiever to like a savings Ndondoni account by the end of it, right? So there was an option to also take like a check account or whatever, but anyways, yeah, I didn't do that. I think I went for the savings account because I already had like a different account. I already had my young professionals account at the time. So yeah, so you can also get a young professionals account, and I also feel like a young professionals account is really a banking suit, right? Because you essentially get access to credit, so you have an overdraft depending of course on how much you earn and all those vibes, and you have access to this account until you're like 30, or like, you know, for most banks it's like until you're 30, and then after 30 you must now upgrade like to a different account, like a professionals and Ndondoni account, private banking account, right? Because they don't really consider you a young professional anymore. But of course with other, okay, so there's that. And then another important thing is just, you know, using a young professionals account, you actually get access to cheaper credit, right? If I am to go to a bank right now, regardless of how much my credit score is, they're likely to give me like a higher interest rate, depending on, okay, of course, basing on the fact that I haven't really had credit for that long. But if you compare the rates that the banks are going to charge you when you have a different account, which is not like a young professionals account, the young professionals account rates are always lower, and okay, almost always lower, because you can never be guaranteed, but like after comparing, I figured that they're lower actually. So you find that they are actually going to be lower, so you get to borrow like cheaply, right? And then another thing that I sort of like talked about was also things like your savings account, for example. So savings account, the main goal is for you to what to save, and then under savings account you have your fixed deposit account, you know, you have your notice 30 days or 60 days notice account, where you tell the bank like, oh, in 60 or 30 days in advance, depending on which account you have, I'm going to make a withdrawal, for example. If you want your money immediately, then they have to charge you like a fee, because you're essentially breaking, you know, the contracts you have with them. And also the other one, the fixed deposit one, is when you say, well, I want to put this money down for a certain period of time, can be 12 months or whatever. You put it down there and it's fit and it's like logged in, and you have access to it after like a certain period. So I think what I love about the fixed deposit account, if they tell you the interest rate, then you're sort of able to figure out or like calculate how much it will be at the end of that period, which you would have locked it away. And it's supposed to give you like a bit higher interest, because you are like literally locking it away without access to it for a specific period of time. And most of the time it's like 12 months and whatever, and after the 12 months you can decide, oh, I want to fix it again, so they fix it for you. And I think it's also just a good way for you to set your money aside, especially if you know you are that person who likes chowing your savings. So if you do want to make a withdrawal before the term ends, then you will have to pay also like a penalty fee as well for doing that, because you had agreed to set this money aside for a specific period of time and you ended up not doing it. Okay, cool. Another account that we can talk about is, you know, like your check account or check account / your transactional account. So in this account you don't have access to credit or whatever, you're literally using this account to make different transactions, right? So there are subtle differences between your check account and your transactional account. Mainly the check accounts, when they started, you had a checkbook, you know, associated with that account. So you would write someone a check and stuff, and you know, it was so exciting growing up seeing my parents like writing checks, and they'll give it to you, and then you go to the bank and then you cash in the you know, you'll cash in the check. But now I feel like if check accounts, they don't come with checkbooks anymore. Everything is just like, it's more like a transactional account right now, where you make transactions and all of that. And also just like another thing is regarding to fees, right, that you pay. So because a check account was like literally made for the fact that you transact and you pay different people or whatever, and they can cash it in and stuff, you had like a fixed fee per month, right? But now with like your transactional account, your normal, they'll call it transactional account or a current account, while you are charged like a fixed monthly fee, but also there are additional transactional fees that you might actually pay. For example, for your debit orders, that won't be included in the fixed monthly fee that you pay. You'll have to pay an additional amount, normally around 3, okay, for Capitec I know it's around 3 rands 50, so you pay that every single month and all of that. So that's just about, you know, transactional accounts versus, you know, check accounts, which at this day and age really they're more or less the same thing. So when you are choosing an account to use, right, it's important to understand, okay, what matters to me as a person and what are my needs. So there are things like, okay, banking suits with, you know, those lines of credit and all of that. So you have to say, do I need all those services that I'm getting? Like with the banking suits, you have savings, you have transaction, you have, you know, investment sometimes linked to that same account. So you need to decide, is this really something that I want? Like, will I use the full services? Because at the end of the day, you'll be paying for those services, right? So it's important to know and understand whether these are important. And also there are like additional things like your added value services. For example, you know, the fact that we are now able to pay for our, you know, electricity, buy airtime, do all those things, pay people, pay the municipality, pay SARS and all of that, or pay DSTVs or whatever, all within like your banking app, right? So those things are also important, and you must also realize, okay, what about rewards as well? Are they, for example, giving me a reward for being healthy, for making healthy financial decisions? What are the benefits? Because at the end of the day, if being healthy matters to you, you would ideally like your bank to reward you for doing what you love, ideally, so that, you know, your goals, your banking and your life goals are aligned. So that's also important to check, are these things aligned? And also, if you're someone who needs access to like a line of credit and all of that, then you might actually consider, okay, do I need a credit card? Do I need like a banking suit with a line of credit? If you don't need it, honestly, if it's just going to be a temptation for you to use money that you have, I'd rather not, take out that kind of account, because why would you actually take out, a line of credit knowing very well that it's going to encourage you to overspend even money that you don't have? So these are some of the things to consider, right? And of course, banking fees are important. Like at the end of the day, how much am I paying? Because it's very easy, especially like with transactional accounts and all of that, where they're charging you extra, right, for certain transactions that you're making, because not all transactions are free. It's important to, like, at the end of the day, look at your bank charges, like how much are they in total, because you might realize that you're paying way more like on bank charges because you're using a specific bank or because you're using a specific account. So at the end of the day, maximize when on the benefits versus the cost, keeping the cost the same, because that's important, because it accumulates over time, it impacts your finances. So from this video, maybe you can tell me in the comment section, are you using the right account, or you need to reconsider the account that you're using? And of course, taking into consideration that moving from one bank to the other, like changing accounts, can be quite a nightmare. But if you know that this is a decision, or this is something you have to do, then go for it and make sure that you are serving your finances and your financial goals. I love you guys so much, and please don't forget to like, comment, share, and subscribe. Mwah. I'll see you guys in the next video. Oh, bye.